Hey guys, Max Convexity. Hope everyone's having a good day. Thank you for joining my live stream. I was just going to open a Coke and take a look at the market. Thought you guys might want to join me. Also, we'll have some, you guys can give me some suggestions or some questions for Sylvia. So I'm going to be interviewing her tomorrow at 1 o'clock. And it's not going to be live. I'll probably post it like tomorrow at 3 o'clock or 4 o'clock. Okay, let's see what Defiance has going on for tomorrow. Okay, so let's start with triple QI. Gives me this warning every time. Okay, triple QI. These guys sold the 18240 strike for $67. So that is hang on. All right, they sold it for $67, so that's going for a total of 1.2 million, which is going to take them to possibly, if they get the win tomorrow, 3.3 million on the month, which is a really good month, 20 cents a share. JEPY sold the 5235 strike for nearly $21. They're going for a total of 510,000, about half as much, still 40 basis points. And that would bring their total to 1.5 million on the month, which would be really nice. IWMY, these guys did the lucky 777 lot trade. They sold the 2070 strike 777 times for $15.52. Too bad they didn't sell it for $17.77 or something. Anyway, so they sold that for 15.5. Makes the break even 2054. These guys are going for 1.2 million tomorrow. And if they get it, it would bring their total to 3 million on the month, which would be impressive. That would be something else. All right. If you guys leave me a question or leave me a comment if you guys are there. I'd like to see who all's there just for fun. All right. Let's look at some other stuff here. Let's look at a chart or two. Then I'm going to show you a YOLO trade for GameStop. GameStop has earnings, right? Or wait, it's too late to play it, though. When is their earnings announcement? Somebody put it in the... I know GameStop is insane right now. If somebody has the date, put it in the comments, please, if you don't mind. I'm going to get out some charts here of the market. Sharing this tab instead. All right. All right. Here's a daily chart of the NASDAQ. Look how far it's come since November. All right. Let's look at the same chart of the S&P. Looks just about the same. And then the Russell, by comparison, looks a little weaker to me. Russell needs to get over this level it's at pretty quick to stop looking like a head and shoulders top, of course. All right, here's oil. Oil was actually up 1% today. The USOY fund, which I don't have daily data for yet. That's the reason I haven't mentioned the strike price. I don't have intraday data on it yet. I've asked for it and I haven't got it. But I'm going to start covering the strike price they sell on a daily basis. And I've also asked for daily data on Tress. So we'll see. Now, speaking of Tress's underlying is TLT. And I stopped doing the Valley of Death, but it's pretty easy to guess. It's going to look about like that. it doesn't move a whole lot. Okay. But TRES is underlined as is TLT, which is the government bond. And of course, USOY's underline is USO, which is a US oil index, which is like the SPY of the oil business. So, in any event, all right, let's look at a few other charts here, and then I'll show you that that GameStop trade, and then we'll look at some comments. Okay, look at Bitcoin trying to turn around here. See, this is kind of looking like a head and shoulders bottom right here. So hopefully this level holds and, you know, starts going up, whatever. That'd be great, right? You guys thinking of some questions for me to ask Sylvia, right? I know you guys have questions. Okay, well, let's look at FEPI. I never look at FEPI. Look at that chart. That looks just like the chart of the NASDAQ pretty much. That's incredible. FEPI's a hell of a fund. Let's check out triple QI. Yeah, not bad. Not bad. Let's check out JetQ. Oh, that's the best one so far, right? Wow. Let's check out SPY. Okay. Let's check out iSpy. Wow. That's the best one so far as far as being the furthest over the previous high. This is not scientific, obviously. Let's look at Bally. Okay. Well, the whole market looks pretty good right now when you're just going straight up at a 45-degree angle like we have been outside of April and outside of basically outside of last October. I mean, other than that, it was just a freaking 6-month face ripper. All right. So let's see what is going on StreamYard. Let's see if I have any questions from you guys or comments. All right, Jerry, what's up, man? I appreciate you being here. Yes, I know it. Okay. So I think Jerry and I both have kind of a common interest in inverse ETFs lately. Jerry probably more so than me, but yes. Okay, so far I'm going to start taking notes. Let's get a little thing going here. You guys aren't going to be able to see this. That's fine. I just promised somebody in the comments of another video. Oh, I know what it was. Transparency. Okay. And the person was making that, and I don't know who it was. I think it was someone I knew, but I forgot to look at the name. But it was someone I talked to all the time in the comments. I forget who it was. It could have been Echo Everest or just one of somebody. It could have been somebody like that. I'm not sure. I think it may have been Echo. In any event, transparency. You know, YieldMax does a better job of having the trades up there. You know, and I have a real life example that happened to me today. I'm kind of upset about this USOY. I've never texted Jay before or emailed Jay before. I emailed him once before when I asked him for the interview, and then I emailed him a couple of times to confirm it or whatever. But I've never bothered him, you know. But Jay's a real friendly guy, and he wants people to ask him questions. One of my viewers was emailing back and forth with Jay on Christmas Eve, and Jay answers his own phone sometimes and stuff. So Jay's very accessible, but for whatever reason, though, the Jay's accessibility doesn't seem to go through to Defiance necessarily. So I'm definitely gonna, you know, broach that subject with Sylvia. I think that'd be a good place to start. So that's transparency. So all right, then number 2. Okay, after transparency. So let's see. Number 2 is we're going to talk inverses, and let's maybe make some subtopics on here. So, like, okay, I heard Jay was on Bloomberg and said crash was not an inverse to Tesla. Yeah, okay. Well, no, because it literally is not an inverse to Tesla. Crash is an inverse to Tesla. Jay's making the point that there's a big difference between Tesla and Tesla, as we all know. Okay, so he's just saying, hey, yes, and of course it's for legal reasons. He doesn't want people doing the old Tesla sandwich. What's up, Reaching Riches? Thank you for tuning in. We're already discussing questions for Sylvia, so if you got any, so far what we've covered, Reaching Riches, is we want more transparency from them. I want a better website with live trades, or the trades update at least within a couple of hours of them doing it or something. And anyway, and then of course Jury wants some more inverse action. Yeah, I didn't see Jay on Bloomberg. I probably need to go clip that and react to that. I've been doing such a bad job. I mean, I've been working on this Tesla video all day long, but the Tesla crash hedging subject is a complicated subject. It's a lot deeper than I thought. And I discovered a really cool experiment I can run, and it'll prove and kind of, but it's taken a long time to, anyway. So that video is probably not going to be out till tomorrow, but I keep thinking by the time it comes out, Retire on Dividends had a crash video today. His probably isn't going to be about hedging quite as much as mine will be, though. But I'm already afraid there's going to be 48 other videos on the topic. But whatever, I'll get it out. I'll get it up. Okay, yeah, Jury, didn't you start a position? I think Jury got a small position of crash today. I hope that wasn't a secret. I don't know if I was supposed to say that, but anyway. All right, Reaching Riches. Yeah, thanks for tuning in. Okay, so let's do this. I want to show you guys a trade. All right, and it's well, who knows when GameStop's earnings are? Does anyone know? I should know. Are they tomorrow or are they in a few days? They're soon. Okay, well, let me look here. I'm going to Google it myself. Or actually, all right, this is what I always look at for earnings. Okay, it looks like they aren't yet. Looks like they haven't happened yet. Hopefully, I don't see GameStop. Okay. Well, anyway, okay, this could still be a good trade if their earnings aren't for a few days. Okay. Well, I'm just going to assume their earnings aren't for a few days. I have a good trade or a decent looking trade in BABA. A decent looking trade I did in BABA. If you guys are interested, I'll show that to you in a second. Okay. We're going to take a look at the option strat. Share this tab. Okay. I made this trade for Echo Eversky, so I may have made some notes in here for him. I did. Right there, I made notes, and you can read them if you want to. Something personal in there, or maybe I'll read them to you guys. But anyway, so this is kind of a way that I might be interested in, and I might play this tomorrow or something similar. Would be interested in playing GME, GameStop. And I like these kinds of trades. And this kind of, it's basically, let me see. I'll just read you what I wrote to Echo. I said, you need $1,000 to do this. GameStop has to go under 25 for you to lose, which is 23% lower than it's at right now at 30. But I mean, that could easily happen in 1 second. I know that, but still, it's a 23% buffer. Okay. If it goes nowhere, you win. But if it goes up, you win also. This is a synthetic poor man's covered call, and you actually collect a credit to put it on. This attempts to monetize the short-term vol built up in the weekly options without capping the upside totally. This is a strangle swap. This could be thought of as selling a put calendar to finance a call calendar spread. Anyway, it's a four-legged monster, but it's actually not that complicated. And you can enter this on any broker as one trade, not financial advice. But what you're actually doing, this 30 put You're selling this 30 put for $6. It's actually bid at six, asked at 6.25, but you take the bid there. Then you're also going to sell this 34 call on GameStop. This is obscenely highly priced, but it's liquid as hell. Look at that, 85,000. You could easily get these on. It appears, but look at this IV. You're trying to monetize this freaking thing right here. We're going out as far as we can. So we're selling that baby all day long. So we just got to hedge it though. So we're hedging it. So that expires Friday. We're hedging it by going out one more week. So this is a poor man's covered call, synthetic poor man's covered call, has a similar profit loss graph to a covered call, but it doesn't have unlimited downside like most covered calls. Most covered calls, the downside is only unlimited by the fact that stock can only drop and go to zero. Well, I like to do them this way because then you don't have to worry about this. You can lose $800 here. Okay, so you're hedging it by buying this 31 call for $8.10. The bid-ask spread's pretty wide, which is definitely true. It still appears to be liquid. This one doesn't have any open interest. This one, the bid-ask spread's not that wide, but there's not a lot of open interest, but enough volume. In any event, I just always fill at the worst of the two prices to simulate them. The total retail price. I don't ever take the middle price and certainly don't take the better price. But there's multiple ways you can look at this trade. You can you're selling this put and call strangle to pay for this strangle. All right, and this isn't one of those crazy strangles like Tresta's where you have double longs out here like that. That's another trade, and that's interesting too. Don't even get me started on that. Don't pretend like we didn't see that. That actually might be the trade right there. Anyway, we'll look at that too. But anyway, what I like about this, if it goes nowhere, which it's not going to do, but let's say it goes up 20% and down 20% and basically nowhere, up 30% and down 20%. So basically goes up 10%. Anyway, you can make $1,000. If it goes down 13%, you can make $400. If it goes up 100%, you can make $600. If the volatility goes up, and it goes up 100%, which is probably what's going to happen, you'll make $1,000. Okay. Your risk is, of course, that the volatility goes down. So we'll simulate the volatility going down. So the volatility dropped to half of where it is, and it could do that. You still make a profit by the market going nowhere. It's still a $500 profit by the market going nowhere, and you still have uncapped upside, and you still have a 13% buffer or 12% buffer. As volatility collapses, it robs your buffer. But even if volatility collapses to zero, you could still make money by the options. This is still a theta positive trade is what that means. And you would make money, even if volatility to zero, and you'd make money on any up move. So this is basically a synthetic poor man's covered call. This is the way I like to do this. They ought to have a fund with 20 of these, doing these freaking things. And then another fund with 20 of these doing a short version of these, or maybe 20 different stocks, and just be in here just robbing all this. You're just selling this damn theta. You just want that $5 right there. I want that 555. Anyway, all right, guys, I'll stop ranting and raving. Let's see what you guys are talking. Sharing this tab. Oh God, I was making sure I was sharing that. I was gonna be sad if I wasn't sharing that. All right. So anyway, I hope you guys like that. All right, we'll get back talking about Sylvia. I like to talk about options. So, all right. I know Jerry's an option trader, but he's more of a strategy guy. So I mean, Jerry's both though. Okay, so Jerry, here's what Jerry says. We're gonna put it on the screen. Okay, so Jerry says, ask Sylvia how she and Jay think the put approach is working. Any plans, protection to adjust the approach? How easy is it to change the perspectives? Okay, yeah, that's all right. I know what she's going to say. It's working great. They have no plans to change it. But as far as how long, it takes her. I think she said 30 days last time, but I can ask her, like, how quick could they change it? Like, let's say another global pandemic happens, you can't predict it ahead of time, but within like 2 or 3 weeks, you can be pretty sure. And could they get in and change it where, yeah, I like that. I like that. Of course, our defense as investors is just to sell out. But of course, that's the idea. You don't want to have to do that. I mean, I get it. I get it. That's a fair question, Jerry. I like that. Okay, so I'm going to get my notes out. I don't forget that. Last time I wrote the notes on the back of an envelope. I was holding them there. And anyway, this time I'm going to use my notepad. It's more professional, right? All right. You guys do any earnings trades? Do you guys like earnings trades? I love earnings trades because you get volatility that's just artificially jacked. And then you also know you get a volatility crush all within that week. So it's a great time to try different strategies, to try, short vol and long vol strategies. Okay. I'm trying to think of like a legit tough question I can ask her, that's basically what Jerry, what you're saying, but try to pin her down a little bit on it. I don't know. I just think that there's a lot of people. Here's what I think. When you're on YouTube, you talk to people in Discord and on Facebook all day that are not option traders, or not even maybe stock traders that much, but just regular people. And they're concerned about these funds going down so fast and stuff. And that's understandable. But I think, though, that Jay and Sylvia, they do this at an institutional type level. They're doing the same thing that insurance companies have done for years. And so I don't think they're worried about it. To me, I just think it's a numbers game. They're just like bankers. And so whenever people try to say, try to get them upset, or, try to pin them down and say, what about the NAV erosion and stuff? I don't know. You just don't get very far with them. And I kind of get it. I mean, but I'm trying to think of a different way to broach the subject. I mean, I do think they get the picture, though. I should say it's like they don't get the picture, but I think their attitude is, look, you want yield, we give you yield. But they I'm not trying to say they aren't sensitive to the criticism, obviously, because they did give a SPY T also, which has hardly any buffer. If the market goes down, that thing's going to be way down because it is going to be down further than the other ones. But anyway, it's still a good fund for a lot of other reasons because of what it does on up days. And I guess the thing is, even though people maybe like me and other people like on the internet are scared about the big down days and stuff, and I am too, maybe the professionals aren't, because they're more thinking at the institutional level of we're just going to give you yield, and we've been doing this for years and years and years, and we know how it works. So anyway, that's just what I kind of that's kind of my opinion of Jay and Sylvia. But anyway, but I did appreciate them giving a SPY T. Jay was receptive. I tried to hint this to Jay when I said, give us one with where it sells a put spread. Once you sell a put spread, no more unlimited loss. If you like my little trade that I just showed, that was a spread, no unlimited loss. That's what you do. Anyway, or that's what I like to do. I mean, $800 or $1,000 is enough to lose. I just, these ones that can lose, it scares me too, for sure. It freaks me out. Here's the other reason it doesn't scare those guys, or here's the way they look at it, because other investments that are competing for these are also long stocks, and they also go down 5% when the market goes down 5%. So I think they kind of look at it as like, yeah, like I said, hey, you want yield, we give you yield. And they do give yield. Okay. What else could I talk to Sylvia about? Maybe Max's math, or I could let's see what Reaching Riches says here. All right. I'm going to put that up on the screen. Thank you, Reaching Riches. Okay. Reaching Riches said, I'm curious how fund managers pick what to open ETF prices at. Like Defiance and Max open all their funds at 20 and others open at 50. Is there a benefit to opening a fund at a higher price or lower? Great question. I'm going to just copy that verbatim, or if I can easily. I thought I could. I may not be able to from this program. Yeah, I probably can right there. Delete pin. Anyway, great comment. Great comment. I always just thought, and I mentioned it in one of you guys roasted me on it. I don't know who it was. Probably freaking, I don't know. But I said one time, these funds all have two business models. They all either start at 20. I was overgeneralizing too. I said they all either start at 20 and they pay 50 cents. And that's that's a very common one that you see. You see ones that pay that anyway, or they start at $50 and pay 50 cents. And that's a common one too. That's like that's the 12% payer, and that's like the JEPQ model. Although JEPQ is down to 8% now. But anyway, and then somebody wrote in my comments because that basically it wasn't true. There's a lot of ones that started other prices, and somebody fact checked me, and that one did not hold water. So you guys get points on that one. Anyway, it's kind of how I thought of it. There is a lot of them that started either 20 or 50. But I think I said something about, I mentioned a specific fund and it never been, I don't know. All right. Let's see, Jerry. Yeah, daily puts. Now, that gave me an idea for a question to ask her. Anyway, so Jerry says, daily puts are new. Adjustments may be needed. Seems Defiance is falling faster than Max on NAV. Yeah, okay. Yeah. Let me go back. I'm going to go back and make sure I didn't miss any other make sure I didn't miss questions. Okay, June 5th. Okay, so their earnings aren't till June 5th. Oh my gosh. Okay, I heard it was in GME, was in ULTY's portfolio now. So I was thinking that usually they get them the week or two before earnings. I was thinking it was like earnings were this week or something. Well, in any event, it's going to be volatile all the way until there. Well, that trade right there, I mean, that's not a terrible trade. I've seen worse trade. I've had worse ideas. I mean, a lot of people are going out and probably trying to play this, and the options are just so expensive. You just can't buy them. I mean, it's 500. It's an IV of 500. But then when you go to sell them, somebody on Discord I was talking to or was talking about doing a covered call, but yeah, it just scares you to death to do the covered call, because you're just scared it's going to run to 300 and you're going to write and you're going to buy it today at whatever and write a covered call at 35 or something, and it's going to go to 300, next week or something. I mean, but that's a nightmare, but it just, anyway, so that's kind of that. What I gave is when I read that guy on board, I forget who it was, I came up with this trade. I thought this might be an alternative to kind of get a little YOLO out of your blood. If you have $1,000 and you want to spend it, but also to get up there and have a really good chance of success. I like this. I like the odds on that trade. All right. So anyway, all right, let's see what else we have. Is this one, have I got to this one yet? Okay. Yeah. Okay. Okay. Yeah. So on that one, yeah. So the protection approach. I mean, yeah, I'm with you. I want protection too. I want them to do something. I'm with you. I'll definitely hit her on that, Jerry. Okay, we've already talked about that. It's a fair question, though. I wonder, there probably is. And what it is you open a fund at a lower price, it gets more retail in. You open a fund at a higher price, and I think institutions like it more. And I don't think institutions are buying these funds. That's not really what I'm saying. But you guys remember a few years ago when like Amazon and Google and everything was trading at like $2,500 or something? Well, they never split those because when it's trading that high, institutions always trade in even lots, and an even lot is 100. The whole world operates on lots of 100. So, so you're trading 100 lots of, Google, that saved the institutions money, because even institutions do have transaction cost a penny or two or something. And to have to do less shares to get the same bang for your buck, it saves them money. So that's why a long time why they didn't split them. But then somebody thought, the other side of that is you split these stocks down, you get a lot more retail interest in them. So I think we'll ask Sylvia this, but I think with Defiance, I think if you put a truth serum in Sylvia, she'd say it's because they're going for retail. But I'll see if I can get her to say that, or I'll see what she does say on it. That's a good question. That's a good question. Okay, well, yeah, let me put this question up. I tried to read it real quick. Okay, the RetireCop. All right. Yeah, I haven't seen you on here before. Thanks for joining, or thanks for watching the show. I appreciate it. I agree with you about Jay and Sylvia not being concerned. They are institutional investors by nature. Their total goal is dividends, not NAV. Yeah, the NAV's going to do what it's going to do, and it just I mean, I'm not trying to say they don't care about it, but yeah. Anyway, okay, I think we're in agreement on that. All right, RetireCop. Let's see, Reaching Riches. Let's see what you're saying now. What's your thoughts on buying puts on these high yield funds? Okay, man, that scares me, because I think the market maker's smarter than I am, and they price the dividend into the put. And yeah, he's trying to guess at it too, but the market maker probably has a better spreadsheet than me. I don't know, but I'll say this: there's people I see on Discord that are having luck doing that. I just don't have any experience with that. And that person that I'm thinking of is not in here right now, but and exercising after X date, then buying back at the new lower price. I just can't imagine it would work. I mean, I get the idea of it, but it breaks the free money law. Anyway, I'm always trying to figure out ways around the free money law. So if that's a glitch in it, I'm interested in exploiting it for sure. I'm just trying to right now. I'm trying to exploit the. Let me show you guys what I have, or I don't know if I can. I'm trying to exploit a different glitch right now in the Matrix. I'll give you guys a little preview. No, it's not here. Hang on. Yeah, but I'm interested in that too. I'm cynical, but I'm interested. I'm just trying to exploit the Tesla crash or crush glitch right now. I have a presentation going, and I'm about halfway done with it. And I have a few slides made. I was going to take a look at it real quick with you guys and show you what I had, but it's taking forever. All right, let's see if you guys have any more questions. But yeah, these are good ideas I'm glad you guys, I was really kind of not looking forward to the interview. I'm looking forward to the interview. Sylvia is a wonderful person, but I was not looking forward to preparing for the interview. Let's say that. So you guys make it easier. But yeah, my thoughts are Reaching Riches. If it works, go for it. I just can't imagine it would, but there's people doing it. So, maybe these funds aren't as efficient as I thought, or these option pits aren't as efficient as I thought. Okay, let me give you another example. Did anyone see USOY today? It was up $1. It was up 1%. Well, so was USO. But then I start looking at the website. It looks like they didn't sell an option. I talked about this on my afternoon report, and you guys probably saw it, but I know they did. There's no way you can tell me that they didn't sell an option. That's what they do. But I guess there has been a time or two, I guess, on YieldMax where I've listened to Retire on Dividends. Maybe you guys know, where they've a day or two has gone by and they haven't sold options in one of their stocks. So maybe they do this sometimes. In any event, they picked a great day to do it because USO was up 1%. They caught the whole thing. So that's incredible. I still am thinking it's a mistake, but all right. So let's see. Seems like the current, okay, Jerry, what's going on here? Let's read this. Seems like the current ETF managers refrain from putting out identical products. Any fear of a big guy will come in and compete directly. Well, those guys that put out the leveraged JEPQ weren't afraid to copy. I was a little afraid they're going after JP Morgan, but maybe that because it's leveraged, it's kind of a niche offering. No, New York isn't for another month. As you know when New York is, CJ. Anyway, are you going to go? I wish you'd go. I'd like to meet you, but it'd be fun to meet the other guys from Facebook. I wonder who is going to go. If you don't go, I wonder who is going to go. But yeah, I'd like to meet you. I'd like to meet all you guys. But yeah, no, I'm not packed yet. All right, well, let's look at the market. Let's see what the market's doing. Maybe let's look at profit boxes for tomorrow or something. We'll see if you guys have any more questions. But I haven't actually put the profit boxes on here for tomorrow, but I've done the spreadsheets. Let's take a look at this. It's getting pretty boring. I noticed volatility went up a little bit today. What we probably have a number tomorrow or something. I bet you volatility was up on all these, 20% or something. This is a beautiful result today. This is the kind of day these funds are made for. Straight sideways day. Really, the past week's been pretty much sideways. From here, we went 1, 2, 3, 4 days pretty much, without really making much progress. But the fund's doing well. These covered call funds do well. And then if they can just have an occasional, they need the occasional like quick little downdraft to pop the volatility, but then they need to recover. It's kind of a happy medium. They're trying to say, I'm sorry, I was showing the wrong tab. My bad. But anyway, all right. Well, anyway, here's NASDAQ. I was just going to show the profit boxes real quick. It looks like our profit box is going to be in the same spot tomorrow that today's was pretty much. Okay. So these guys sold the 240. So they're break even. So 172 and 240. All right. All right, this is how you draw a profit box. Okay, so you guys are wondering. All right, well, that's a decent size. That actually doesn't look too much different than today's. No, it's actually the same. Okay, well, on one of them, it was like 20 or 30% higher. Maybe it was on, okay, on this one right here, it's 33% higher. So maybe something's going on JPY that they aren't worried about in triple QY. Maybe I have an error. Maybe for whatever reason, they're, like I say, maybe it's an earnings in a S&P 500 stock or something and not in a NASDAQ stock. I don't know. And this one, went from 520 to 780. That's a gigantic. That's a pretty big increase. So I'm pretty sure we have a number tomorrow. I need to go back after I get off. I'm going to go back and check my numbers on triple QY. All right. What other questions do we have for Sylvia? What are we talking about here? All right, Jerry, let's see. Oh, RetireCop. Okay, wait. Let's see. I'll put this up here. Okay. Well, this is awesome, RetireCop. I thought for a second it was you're going to be somebody that wasn't a fan. I was getting around. I thought it was critical. But anyway, some people are critical of my. For a while, my videos were kind of long and rambly. But anyway, I tried to get back on point about 2-3 weeks ago, and I went back to the 5-minute format. So anyway, I'm glad you appreciate that, and I'll try to keep up the good work on that. I can always come on here tonight at 9 o'clock with this one if I want to just talk and not have a script. I was just getting lazy and making freaking slides. I've just quit making slides, but then I get off topic, and I'm sorry. Anyway, it won't happen again. But I appreciate you for watching, RetireCop. I really do. Yeah, who scares people? Oh, yeah, the other someone because it's like too much. Yeah, okay. Yeah, well, I'm trying to be kind of like the Reader's Digest version. But I do like detail and stuff too. But anyway, I hear you. All right, so get this. I had to subscribe to, I'm now paying for StreamYard, which is fine because I get to do these banners and I can do my graphics and stuff. But I had to add, to call Sylvia, I wanted to make sure they always use Zoom. I wanted to make sure to do it exactly the way I did with Jay because all the technology worked out beautifully. So I resubscribed to Zoom for another month, and I like Zoom all right. I mean, actually, I could just fine, but I've just now got used to StreamYard. And anyway, we need to get Jay and Sylvia using StreamYard, get them up to snuff. All right, guys. Well, if you guys don't have any more questions for Sylvia, and of course, all of you guys, I talk with every one of you guys, except for RetireCop outside of here, either on Facebook or on Discord or in the comments of these videos. A RetireCop, you might want to think about coming. If you want to, you're welcome to come to our, we have a pretty good Discord that some of us are at. We're in about 3 of them. We're on, I'm on Camir's. I'm on Retire on Dividends. I'm on Nathan's, and I'm on Todd's, and I'm on Mike, the Tactical Stock Scalper. So I'm easy to find. Anyway, I hang out most often in Retire on Dividends, but also I have a Facebook page now. Here, I'm going to put it in I'm going to put the link in the thing right now. Anyway, you guys connect with me there. And, because sometimes I do talk fast and I skip over big detail and I make broad generalizations, but I'm happy to try to defend whatever I say or whatever, try to explain it better. And oftentimes I get the opportunity to in Discord. Anyway, I'm going to put my Facebook in there for anyone that doesn't have it. I'm thinking about switching it to a fan page or not a fan page, like maybe just like a private page, so I can run it like kind of like a Discord page. But like where we can keep people off of we don't want on it, or kind of what that was the idea. Or maybe I should just do it like just a Facebook page. I don't know, just a straight page. If you guys have any ideas, I'll be taking suggestions. I will be listening to suggestions. I may not necessarily take them. Okay, well there it is. Let's see what else. If there's no other questions, I'm gonna let you guys get out of here. Yeah, that'd be great. Thanks for reminding me, CJ. Yeah, if you don't mind the thumbs, I never say that. But lately, I mean, I've been griping because my views have been going down, but it's probably has something to do with my content's been going down too. Anyway, the content turned the corner about a week and a half ago, so we're on the way back up. We're trending up. We aren't going down anymore. Everyone bought the dip on my content. Okay, the dip has been bought. It's not in a free fall. It's not a black swan. All right, guys. I appreciate each and every one of you guys. Like I say, any more questions, and hit me up in Discord. If you think of anything else you want me to ask Sylvia, we will do it. Yeah. What about your question on shorting, Jerry? Oh, your question that you asked me in real life. Yeah, I'll get over to that. Or your question you want me to ask Sylvia on shorting. You just want me to ask Sylvia. Yeah, the inverse. I will definitely ask her that. I will definitely ask her. And I still need to talk about your real life stuff too. All right. we'll get into all of the middle of that. And I really am looking forward to getting this Tesla and crash video out. I can't wait to see what you guys think, because at first I thought it wasn't going to work, and it still is going to have problems. It's not going to work perfectly, but I think it might work well enough. So we'll see. I've been running some experiments on it, and I've been using a different stock also to try to prove my point on Tesla, a different inverse. So that's what's taking a little bit longer. I appreciate you guys. Hopefully it'll be out tomorrow. All right, you guys, you have a great evening, and I'll talk to you later.